GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. Probably the biggest news as we start the new week is the breakout to a fresh 6-year high in dollar yen. In many ways this is just a very simple trade. The trend has been higher for a while. We've been talking about it, making higher highs and higher lows. And behind that, you've got the Fed, who just raised interest rates in the US last week. And also last week, you had the Bank of Japan, which maintained its dovish status with no hints of a rate hike anytime soon in Japan. So naturally, Forex markets are adjusting to a stronger dollar, weaker yen because of the interest rates, and that's in keeping with the trend we've seen for a while. So obviously I'll dig more into that particular chart in a minute. Elsewhere, we had a massive bounce in the stock markets last week. You can see, and I'm going to show you in more detail, that the S&P500 broke back over its 50-week moving average with a big bullish engulfing candlestick for the week. Oil had another down week, but rebounded well off its lows. And then also the euro had a decent week, but just still getting capped at a resistance that has been resistant for a couple of weeks now. So it's showing strength, but not quite making that determined breakout that we were actually even looking for a week ago. So I'll cover all that and more. If there's anything else you'd like us to cover in these webinars, obviously just drop a comment in the video. Otherwise, click that like button, please. It's right there at the bottom of the video. Click that. It encourages us to make more of these videos. Okay, let's have a look at the euro. We'll work through Forex and then through indices and commodities and crypto, as we usually do. This is the weekly chart. Actually, you can't see it so good. Let me zoom in a bit. Here you can see that this is what I was talking about. That was the resistance from a couple of weeks ago. Last week we had a good bullish close, but again fell away from that same resistance, which you can see is the low from January, is now support, becomes resistance. So classic technical analysis, right? That's what we're doing here. If we drop down to the daily chart, you can see that that in a bit more detail. There's the low. There's the most recent highs. We got a little brief spike above it actually on Thursday, I think it was, and then pulled back from it on Friday. So big question for the euro into the new week is, do we get a breakout through that key, just 111.20, thereabouts? 111 is the big number, just in that vicinity. If we can get a close for the day above 111 and ideally 111.20, I think that adds a lot to the British case for the euro. At the moment, we could just fade. And so the bearish scenario, if I drop down to the 4-hour chart, let me zoom out a little bit here. You can see we've basically got a triangle pattern here with quite a neat trend line through the most recent lows. And actually that trend line has now kind of stacked up with the 50 period moving average on the 4-hour chart. So I think, and the previous high, which has now become the most recent low, so resistance has become support. So that's how we started noticing the change in the trend, right? This was obviously lows getting broken, highs getting respected, lows getting broken, highs respected, etc. Here we got the highs broken, and then we got the lows respected, and we got as the week went. This was last week's webinar, but as the week went on, that big break of resistance, highs being broken. That did usher in this corrective period where, again, yes, we have this high here broken and then now has acted as support. And that's where we stand ourselves. So 3 layers of support, actually. Former high, now the low as support and resistance-based support, the 50 period moving average and a rising trend line. So I think if we get a dip into that area again, for those who are bullish, that might be an opportunity. Equally, if you're looking at this resistance having held and still overall in a bearish market, right? What do you want ideally in a bearish market? The trend is down. You want to bounce within the bearish market to sell into. Overall, that's a good thing to do, right? You have an uptrend. You want to wait for a dip and buy the dip. Downtrend, you want to wait for a bounce and sell the bounce. So potentially this is a bounce to sell into. So this is the resistance up here. And if this support gives way, which is actually about 110, so another important layer of support, it's the 110 round number as well. So actually four areas that are creating a confluence of support here. So reasonable to try and buy here if you're bullish. But if we get a break below there, then that to me would be a pretty bearish sign. We may get a spike low through there and then close above. That would be very bullish. But if we close below there, even on the 4-hour chart, I think that would be pretty bearish and would probably open up a retest of the lows down here at 108. So that's the euro for you. We're on a triangle consolidation and we're looking out for potentially buying the dip for this correction to continue up through this resistance, or we're looking for this support to give way and give us the clue that the long-term trend is kicking back in, which is down, and going to take us back down towards the lows, maybe even lower. So not a dissimilar situation in the British pound. Here's that low from, or it wasn't actually January this time. The January low was kind of here, which is what's affecting the euro. Actually, it's the November low, which has been the support and now the resistance for the British pound. As you can see, broke down through it, rebounded to it. In theory, we're talking about was support broke, became resistance. So, support to resistance, and then the downtrend continues, theoretically, right? So we are with a bearish bias here. But again, we've got this little short-term bit of positive momentum taking place where you can't see it so well here. But we've had a few positive days in a row. The British pound generally considered a kind of risky currency, and so there's a rebound in the stock markets and there was a rebound in risky currencies like the pound too. Zoom out a little bit here. You can see we've gone from this kind of negative trending environment below the moving average. We held the lows, broke the highs, and then since then we've kind of consolidated, and it's not been the most compelling bullish breakout. We've just basically snapped the very bearish downtrendy period, and we've kind of just broken above the high, and we're having a bit of a rest from the downtrend. But this resistance has held through here. So whether we really want to be bullish would probably rest on the breakthrough these highs here, which is pretty much 132 on the money. And then again, like the euro, got a little rising trend line here through the lows. We've got first the rising trend line, which is actually kind of getting tested as we speak. And then we've also got, similarly to the euro, we've kind of got the old highs through here and the support, which is about 131 and the 50-period moving average. So if you're a bit aggressive, you'd be looking for closes through this rising trend line to get in early on this correction having ended and the downtrend resuming. Or a bit more of a conservative entry would be waiting for this kind of major round number to give way around 131 and also these lows here in this resistance. But we've had a kind of swing, a swing failure here. There wasn't a higher high in the chart or anything. It's not divergence, but you can see momentum kind of rolling over here a bit before having even reached the 70 level. So there wasn't a big surge up to the overbought, and we're pulling back from overbought for buying into a new trend. We didn't actually get to overbought. So that's a bearish sign. We could rally from the 50 level and eventually get overbought. There's no perfect science to this, but at the moment, the pound not looking too compelling on this rebound. And it's stalled, having broken above the 50 DMA. Naturally, if it breaks above the 50 DMA, you want to see it kind of, rally up, pull back to the high, rally up again. But we've just rallied up once, and then we dropped right back to the 50 DMA again. We've rallied, and we've just stalled at the same high again. So we've not, apart from this, we've not been making higher highs and higher lows, really. I mean, higher lows, yes, just about, but not really higher highs. So, we really can get a lot more encouraged with the break above 132, and a break below 131 would probably be the confirmation we need that the downtrend's resuming. Moving on to dollar yen, which I mentioned at the start here. Here's our weekly chart. We can actually look at the monthly chart, which I also did last week. And this same resistance has been on. It's actually a different color to what I'm using at the moment because it's been on there for a while. And this is the big resistance that we've broken through in dollar yen to reach our 6-year high. So obviously the last time we were here was back in 2016. So pretty interesting from a dollar yen perspective. We certainly could fade from these levels. I mean, this is a major resistance. There's certainly a chance that we fade back from under we fade back from under 119 because we've had a decent run here. If we close the week back under this, you could say this is a weekly chart, so there's a lot of variation here. But 118.50, if we close back below this high that we're breaking out above now, that'd be a false breakout and could be the impetus for at least some sort of move back down towards maybe the middle of the range or something like that. So at the moment it's bullish. I mean, and we're obviously the trend is neat now, and that's what I said at the start. We're in higher highs, higher lows. The fundamentals all support a rising trend. But if you are looking for an excuse to sell into this strength, well, I think a false breakout above 118.50 and a close back below there for the week. So this is probably a kind of trade that you'd be looking at even for next week, because this is a major level. So even just a daily pullback. Well, a daily pullback, actually that would still be interesting because within the week we could still pull back intra-week on a daily basis. Come on, there we go, back down to these highs. And that would be, hold on, not. So we could see a dramatic pullback through, even get as low as 116 and rebound dramatically off there, something like that. That could still even happen intra-week if we had major volatility. But that's why, really, with respect to this level and whether this is a false breakout, probably need to be using it on a weekly basis. And now I'm just on the 4-hour trend, and you can see this was the range we'd been in for a while, and this is what we were saying back then, right? We were saying that we've been in a long extended range, and normally that's how volatility works. You go from low volatility, just range going nowhere, to strong high volatility. Could have been a break up, could have been a break down. We didn't know which way it was going to go. The fundamentals supported the break up, and that actually is the way it went in the end. And you can see since that massive surge up there, we had pointed out last week that if there was going to be a really decent dip, it could just pull back to this tiny little pullback. But it never, that was just too far to go in such a bullish trend. So it dipped back about 100 pips. So from 118.40, we got down to 117.70, so not even, more like 70 pips. And then we pulled back up to the resistance again, broke the resistance, tested the resistance as support, classic technical analysis, classical Dow theory. And now we're rallying up through this resistance again, and we're kind of testing this resistance. So it could be this spike high if the market's particularly bullish, or maybe it'll just be these kind of closing levels down here. Maybe we'll get a little drop back to that and rally on again. Or maybe we drop back down to this same support level again. And then if that one gives way, then that's obviously our kind of key long-term resistance. That's when we maybe start looking at that kind of weekly fade. So very much a bullish market in dollar yen, but because we're so overstretched, I'm just wondering if maybe we get a kind of fake out trade on a weekly basis, and we could actually think about trading a kind of short-term correction, maybe by next week. Right, I'm going to switch away from Forex now. I'm going to move over to the precious metals market. And unsurprisingly, really, after that massive pin bar pattern where we rallied right up to nearly record highs and pulled right back almost to the start of the week, unsurprisingly, there was a bearish follow-through to that week. And so now we've got ourselves basically an evening star with a long wick. So this is a pretty bearish setup overall. I mean, there's a lot of reasons to be positive on gold, and maybe this is as far as the correction goes, but just this in itself, the the long candle, the long wick, and then the follow through, that's pretty bearish. That's just going off the weekly candlestick. But obviously there's more to consider than just that. Here we're down to our daily chart, and you can see that when we had that first monkey hammer down, as we've been talking about for the last couple of weeks, where we closed there is actually where we ended this last pullback. So no real surprises there. There's obviously, this is a pretty high action area, which is basically around 1900. 1900, a big psychological support for gold at the moment. Let's jump down to our 4-hour chart, and you can kind of see the picture a bit better. Obviously, this was a period of making higher highs, higher lows. The resistance is breaking, and then we had that big sell-off, and we held a bit of support, and then we sold off through it again, and we came back, as I say, to these to the 1900 zone, which was resistance before. And we did a little false breakout there, and you see this was a neat little trade, a kind of stop hunting rally, right? Maybe we got this first little bounce up, people place their stop losses under there, and then the big players, the big banks or whoever they are, come rush, push the prices down through the high, the stop losses get triggered, these people are, or the sell orders or whatever the case is are triggered, and those sell orders are used by the big boys to buy the market back up. And we've had a decent little rally, but it's faded pretty quick. And now we're, this was the resistance, and we've kind of already been below it a little bit. And it just doesn't look like the most powerful rally to me. And we've not even made it back up to this important level up here, which is the you can see on the weekly chart is these two highs here. If we did get a move up to there, I'd actually find that kind of interesting for a sell opportunity, but we've not even got there yet, and we may not. So another rally up from, if this support does hold and we rally up to test there, I'd actually be thinking about that 1960-ish kind of area as a significant level, that where we had that first spike up basically, and it's been the kind of the neckline of this like head and shoulders that we pointed out. I believe we mentioned it last week. Obviously, it's turned out pretty well. That neckline could be an interesting sell opportunity. You could obviously have the orders resting there, or you can wait for a price action confirmation in that area. But overall, I think this market still looks soft. We just got oversold, basically. We've had a bounce off oversold levels, but we barely even made it through 50 on the RSI. So there's 50, which is basically what we faded from. So maybe we got a rally up towards maybe 60, 65, but I don't think we probably get overbought again in gold for a little while. And the market looks a bit soft, and I think maybe we even get through the 50 DMA eventually, the 200 DMA down here. I really am just watching this 1960 level. I think that could be an interesting area for the downtrend to resume. But if we do close above it, then okay, look, time to admit you're wrong, and actually we'll be back above the short-term moving average, and maybe this whole correction is over, and we're ready to rally up and have another go at record highs. Silver, as you can imagine, similar-ish situation. Had that kind of bearish candle up above the breakout area, closed back into the range again, but did hold on to the 50 DMA, to the credit of silver. So here you can see on the daily chart, we haven't quite made it back to the 200-day moving average. Actually, we just had a golden cross. So the 50 DMA is just crossed above the 200 DMA on silver, so that's a bullish sign normally, and we've just had a big pullback, so there will be some people looking at that favorably. We do have this tweezer bottom, where the sell-off came back up, sell-off came back up. You can see it better on the 4-hour chart, and you can see that second tweezer bottom, we had the kind of bullish 4-hour candle. You remember on gold, that's a similar thing here actually, where we had the kind of flush through the first low, but only just, and then rallied strongly off it. And then same thing here, you can see here is that kind of major level, where in gold I was talking about 1960, we didn't even get there. In silver we did actually get there. It's more like the 25-50 areas, like the equivalent. We basically got it, we pulled back from there, and then we come back to the resistance. Maybe we drop in silver, we've not actually hit the 50 the 200 period moving average. So maybe we get another flush through these lows again, and then pick up more buyers to come up and challenge 25.50, maybe break through it. It's a sidewaysy market. Basically the trend has been down. Now it's broken that trend. It's not a clear uptrending market like during this period. It's kind of like the corrective phase, which is harder to pick out. We'll be back in more like a bullish phase if we get back above 25.50, and then we can start looking for buying the old highs as support and things like that. At the moment, it's just looking kind of a little bit uncertain. Could be worth an opportunity to try and get long the market if we come down and test these lows again, because it looks more like sideways rangy versus some kind of serious downtrend. Right, here's the oil market. Obviously, it's been behaving pretty crazy. We had that massive move up, then we had a massive sell-off. We did get below 100, but interestingly, we did close the week in WTI, which is this one, and in Brent, which tends to price a little bit higher. We closed both of those contracts back above 100, so that's actually encouraging. So with this big rally off the lows and with the close above 100, I think we can still be quite bullish on this market. You can see we kind of came down out of overbought, and maybe we're going to get pushed back into overbought territory again as we make an attempt at the old highs. So, and then in the last few days we've been pulling higher. This is the daily chart, and we've basically found support at the 50-day moving average, and obviously these previous peaks before that last rally, we've kind of undone that entire kind of crazy rally up, pulled back. And now we're kind of resuming maybe a more moderate uptrend. So down in the 4-hour trading time frame, so potentially, as I say, this whole correction here might be done. We may have bottomed. We did a crazy thing back, and now we're just modestly moving higher because generally it's a tight market with not as much oil available. Mostly because of the sanctions on Russia. So if we're very bullish and aggressive here, this is the peak we've just made, which is about 105, I believe. 104.50 down to 104. That would be an area for the price to pull back from and accelerate again. Or as you can see, we kind of had a low. A deeper low and then a little low again here. So maybe this is like a inverse head and shoulders pattern happening here. So we could get another dip down to this low, even kind of a little spike to the 100 level, and then maybe get a rally up from there. So aggressive bullish entry, this first resistance, potentially support, then this support again. And I think if we give up 100, that's when we start looking for more like bearish opportunities. But at the moment we're above it, we're not. Here's the bullish engulfing candlestick on the S&P 500. It could work, but it's an aggressive entry to try and buy right at the end of a big bullish week like that. If we were to get some kind of pullback, because it is still a bit of a kind of choppy, scary market, right? If we did get a pullback to where the what makes it the bullish engulfing candlestick, i.e. the high of the previous week, that would be right there. So that would be down at 4,300, a bit above 4,300, 4,340 to 50. Come down to the daily chart, we can kind of see a bit better there. That's that kind of the previous week's high. So we've had a big rally up, 1, 2, 3, 4 days on the trot. Maybe we get a fifth, but if we do get some kind of pullback, maybe it comes all the way back down here, and that could be an interesting opportunity to try and buy into this this positive momentum accelerating for a second time. And then equally, if we drop below that level, I think this is kind of a pivot to look for. The 4,300 is where the market could get really soft again if we actually got a daily close under there. And then on the 4-hour chart, you can see that we've been putting in higher highs and higher lows again. This was that kind of range peak that we came up, tested briefly, pulled back down to the little resistance, acted as support and rallied above it. So again, we could just pull back down to the top of the range again, and that would act as support about 410, 415 maybe. If we did get a dip down to there, that could be just buying another dip within this kind of strong trend. If that level gives way, then obviously we do have the 200 period moving average, and then, as I say, that kind of previous weekly high, which could be interesting. So big question going forward for the stock market really is this a bear market rally to sell into? It was a massive rally last week, the biggest weekly rally in a while, and those massive weekly rallies, they tend to happen in bear markets. So maybe are we coming up to an opportunity to sell this market? Potentially, but at the moment the momentum on the short term and the trading time frame is bullish. Now switching gears to Bitcoin finally. It's still very much in the same trading range that we were talking about in previous weeks, where you can see we're pretty much trading in between these highs here and these lows here. I mean, this is the general deal with Bitcoin at the moment. Let me try and copy it. There we go. So, we're kind of in this range still in Bitcoin, so it's hard to know which way it's going to go. Feel like it would be pretty bearish if we broke to the downside now, but equally could get a major rush up to new highs. Given the low volatility, again, it's kind of that dollar-yen phenomenon. We've had low volatility in Bitcoin for a while. If we can break one of these levels, which we will do eventually, then you can imagine a really strong trend in the other direction. And it seems like the market is trying to find a bottom here. Obviously, this was very much a downtrending period, and we've not made new lower lows. And then just on the very lower time frame, we are slightly positive here. We've pulled back from that high, but we're actually trending above this rising trend line. And I think on a short-term basis, while above that rising trend line, we can actually feel pretty bullish and hope for a break above these highs, and it could lead to the test of the top of the range again. But equally, if we break below that rising trend line, maybe a test of the bottom of this short-term range again, maybe a test of the longer-term bottom. So trend line acting is a kind of interesting area to decide whether to turn bullish or bearish in what's still overall a kind of pretty neutral trading zone. All right, I'm going to call it a day there. Thank you very much for watching, everyone. I hope that helped. Good luck trading this week, and see you at the same time next week.